Welcome back to Malaysia Money Matters Show. It's the 9th of July, 2025. We've got quite a bit to unpack today, covering the latest from Malaysian companies and some big international shifts. Let's jump right into the local scene. First up, AEON Credit. Their first quarter net profit fell, actually quite sharply, by 27.1% to RM 77.55 million.
Yeah, and that's despite their revenue actually climbing by nearly 15%. So what gives?
Well, the main drag seems to be higher impairment losses on their financing receivables.
Right. And crucially, their non-performing loan ratio, the NPL, it ticked up slightly to 2.57%.
So what does that really signal? Higher revenue, but higher bad loans.
Well, it suggests caution, It could mean that while people are maybe borrowing more or spending is up on the surface, the ability to repay is getting a bit weaker. For you, this could be an early indicator of some underlying financial pressure on consumers, something to watch.
Okay, sticking with company health, Bina Puri Holdings, two of their wholly owned subsidiaries got served with winding up petitions.
Ah, yes, from the Inland Revenue Board over unpaid taxes, right?
Exactly. Amounts were RM 849,499 and RM 4.2 million. And this isn't the first time this year either.
No, it brings their total to at least 5 petitions in 2025. Now, the company says there's no immediate financial or operational hit, but
But a string of these surely can't look good.
definitely not. It really tests investor confidence. I mean, 5 petitions. It raises questions about their long-term stability regardless of the immediate impact stated. It's a situation worth watching closely.
All right, let's shift to some brighter news. Binastra Corp. They secured a pretty hefty construction contract.
Oh, yeah. What are the details?
RM 405 million for a residential project in Bukit Jalil. This adds to other projects they have on that same piece of land.
So that boosts their overall order book quite significantly.
It does. Their outstanding order book is now around RM 4.6 billion.
Okay, that's substantial. That provides really strong visibility for their future earnings. For you listening, it's a positive sign for the construction sector, signals ongoing development activity.
And staying with forward-looking moves, Khazanah National has been talking with sovereign wealth funds in France and Italy,
Interesting. What about?
exploring cross-border collaboration, specifically focusing on artificial intelligence, or AI.
Right, this fits Malaysia's strategic push into high-tech areas. It's really about tapping into global expertise, building those partnerships to stay competitive in fields like AI. Smart move.
And speaking of AI investment, YTL Power International has been making huge strides.
They really have. How much have they put in so far?
Reports say about RM 10 billion invested in AI and the necessary infrastructure data centers, NVIDIA's latest chips, the whole package.
Wow, RM 10 billion. That's a massive commitment from the private sector.
And they're planning to launch Malaysia's own large language model, ILMU 1.0, and an AI-powered digital bank called Ritbank.
This is potentially transformative for Malaysia's digital economy. ILMU 1.0, a homegrown AI model, Ritbank. I mean, for you, this could translate into new high-tech jobs and a much more advanced digital infrastructure across the country eventually.
Okay, moving north to Penang. Perbadanan Bekalan Air Pulau Penang, the water authority there.
Ah, water infrastructure. Always critical.
They've launched a RM 5 billion Sukuk program, partnering with UOB Malaysia and Maybank Investment Bank.
A sukuk, so Islamic bonds. And that funding is earmarked for.
Long-term water infrastructure projects and also sustainable development initiatives in Penang.
That's crucial for water security there, obviously. But it also sets a really good example for other state-linked entities on using sustainable finance mechanisms. Shows a commitment to green development.
Now let's talk energy. Kananga Research House has put out a note of caution for oil and gas investors.
Oh, what's their take?
They're expecting earnings for upstream service providers to decline heading into fiscal year 2026. They've actually downgraded several stocks.
Well, the pessimism.
They're citing a prolonged downturn in petrochemicals and just ongoing uncertainties in the market. They basically say it's too early to bottom fish.
Right. So for investors, the advice is basically wait and see. Continued headwinds likely, especially with global market dynamics and, OPEC plus output decisions. It remains a tricky sector.
But on a more positive note for the big players, Petronas has achieved a milestone.
What's that?
They've shipped their first liquefied natural gas, LNG, cargo from their new LNG Canada facility. Destination: Japan.
Ah, LNG Canada.
Yeah.
That project's been watched closely. And is there an environmental angle?
Yes, apparently the facility boasts significantly lower greenhouse gas intensity compared to the global average for LNG facilities.
That's important. It reinforces Petronas as a reliable global LNG supplier, but also underlines their move towards lower carbon energy sources. It's about diversifying supply responsibly.
And one last bit of Malaysian news. The Paris Air Show.
How did Malaysia do there?
Pretty well, actually. Recorded RM 1.16 billion in potential sales, showcasing the country's growing aerospace ecosystem. Exports in the first 5 months of 2025 hit RM 3.63 billion.
That's strong. It signals growing international confidence in Malaysia's high-tech capabilities and deeper integration into global supply chains, especially aerospace. Good news overall.
Okay, let's shift gears now to the international stage, specifically the new U.S. tariff situation. President Trump has set an August 1 deadline.
Right. For new, higher tariffs on quite a few trading partners, what are the numbers for our region?
Japan and South Korea face 25%, Indonesia 32%, Thailand 36%, and Malaysia's looking at 25%. Trump has hinted there might be room for negotiation, though.
Well, that deadline certainly creates a lot of uncertainty for global trade. It puts immense pressure on economies that rely heavily on U.S. exports. It's clearly tariffs being used as a negotiating tool.
For Malaysia specifically, MITI, the trade ministry, clarified something important. That this 25% isn't on top of existing tariffs. It's a new, standalone rate effective August 1st.
Okay, that's crucial clarification. And the impact, particularly for regions like Penang.
It could be significant. Penang accounts for about 55% of Malaysia's exports to the U.S., mostly electrical and electronics. Semiconductors are exempt. For now, thankfully.
But still, a big chunk of exports potentially affected. Industry groups must be pushing for action.
They are, urging swift diplomatic moves and domestic countermeasures. So what's the potential hit to the economy?
Well, Hong Leong Investment Bank put out an estimate. They see a potential drag on Malaysia's GDP growth of between 0.5 and 1.5 percentage points. That's quite significant.
A drag of up to 1.5 points. Wow. Is there any upside, any chance of avoiding the full hit?
HLIB thinks there might be. They believe Malaysia still has a window maybe to negotiate a lower rate, perhaps something around 15%, similar to the deal Vietnam apparently struck recently. But this really underscores the urgency. For you, it means watching government negotiations closely, and for businesses, it highlights the need to diversify export markets, reduce reliance on the U.S. if possible.
And these tariffs are already causing ripples regionally, aren't they?
Absolutely. For instance, Indonesian palm oil faces a 32% U.S. tariff. Malaysia's is lower at 25%.
So could that give Malaysian palm oil a competitive edge in the U.S. market?
Potentially, yes, it might shift some demand. Meanwhile, you have China warning the U.S. against these tariffs and also warning other countries not to make deals designed to cut China out of supply chains.
Things are getting complicated.
Very. These moves are actively reshaping global trade flows and supply chains. It adds layers of complexity for businesses trying to navigate this evolving trade war landscape.
And this uncertainty is reflected in central bank actions, too, or lack thereof. Look at Australia.
Right, the RBA. They surprised markets by holding their cash rate steady at 3.85%. Everyone expected a cut.
Why did they hold?
They said they need more data, more confirmation that inflation is actually slowing down sufficiently before they cut rates.
Interesting contrast with Malaysia, where the expectation is quite different.
It is. Here, about half the economists surveyed expect Bank Negara Malaysia, BNM, to actually cut the overnight policy rate, likely to 2.75%.
To cushion the blow from these external headwinds, like the U.S. tariffs.
Exactly. It shows divergent strategies. Australia is being more cautious on inflation data, while Malaysia might move proactively to ease borrowing costs, hoping to stimulate domestic consumption and investment. For you, that could mean potentially cheaper loans down the line if BNM does cut.
And finally, let's look at U.S. stocks amidst all this trade tension.
You'd think they'd be nervous, but
major Wall Street brokerages, BofA, Goldman Sachs, they've actually raised their year-end targets for the S&P 500 index.
yeah, it indicates recovering investor confidence despite the tariff noise. Why the optimism?
They cite things like reduced policy uncertainty, perhaps compared to earlier fears, resilient corporate earnings, and the potential for U.S. interest rate cuts later.
It seems large-cap companies in particular might have some buffer, maybe through inventories, against the immediate tariff impacts. Suggests a degree of resilience in the U.S. market, at least for now.
So quite a complex picture emerging from all these headlines.
Definitely a lot to digest.
And that wraps up our deep dive for today. We hope this breakdown helps you make sense of the financial currents shaping Malaysia and the world.
Indeed. If you want to stay on top of these developments and understand what they mean for your money, remember to subscribe to the Malaysia Money Matters podcast. We'll be back with more insights soon.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.